Well, our alpha manager of the day is with us, Trideep Bhattacharya, Chief Investment Officer at Edelweiss Asset Management Company. It's really good to have you with us here. Thank you very much for your time. You're broadly saying that markets seem to be 10-15% more expensive now, right? And that is a sentiment one is hearing more and more. I was reading a note written by one of a PMS manager, basically saying, is this time different? And kind of, again, going back to whether we should be sort of accounting for higher valuations and what should be the reason. So there's a real kind of dilemma going on, a debate going on. But the point is, what should one do? I mean, for example, you and your fund don't take any cash calls, so you largely stay invested, right? So you got to move away from very high valuation companies to relatively lower down the curve, at least in terms of valuations. How easy is that right now?
So basically, two parts to the portfolio adjustment. One is adjust stock picking in such a way that we go to lower rung of valuations or lower valuations within the same area, but yet not take a too big a deep dive or too deep a cut on the quality of the company that you are betting on. So that's one way, one adjustment that we have done of late. Second is in funds where we can take a call across market caps where we want to be. Our portfolio allocation towards maybe the large cap or mid cap has probably gone up a little a spectrum as opposed to the mid and small segment. So I mean, we're certainly saying that it's time for taking a more balanced approach as opposed to kind of taking a mid or small cap centric approach, because in some pockets we are seeing valuations which are on the higher side, which are best avoided. So two parts to it. One is within the same theme, same area, same sector, shift to a lower valuation stock without taking too much of a knock on the quality of the company. And second, go slightly higher up on the market cap chain. These are the two bits that I would say. Nothing is easy, of course, but that's the attempt.
Trideep, afternoon. I believe in your Flexi Cap fund, you all hold HDFC Bank quite prominently. What have you made of the recent comments by the management, the way the stock has reacted to the analyst meet, and what's come out of it? Does it worry you?
So, I mean, not in the medium-term standpoint. I think the risk coverage is probably higher or needed is higher than what we had anticipated, and you are seeing the reaction to the name. But it is not diluted so much that one gets worried about the portfolio quality over a period of time. While we hold SDFC, one of the leading banks that you mentioned, but our active position in that is kind of fairly limited. Overall, we are mindful that as the company goes through the process of merger, some of these things will have to be ironed out over the next couple of quarters, and then the synergy benefits will flow through. But we see that more as a transient impact rather than any long-standing quality issue with regards to the book that they operate with.
You said you hold the stock, but the active exposure is quite low.
Yes,
what does
that's
that
what I
mean?
meant. So active exposure, we can't get stock specifics, but when we say in general active weight is lower, it means that it has a certain weightage in the index. So vis-a-vis the weightage in the index, the weightage held in the portfolio might not be too different.
Okay.
Trideep, the last time you were kind enough to share with us a couple of sectors where you're bullish on and where you added, I think EMS, hardware-oriented companies as well. I think, you added a little bit, and you perked up a little bit of exposure to pharma and IT. What's changed now? Have you lightened positions firstly in any sector?
Yes, so overall, with regards to global cyclicals, is an area is an area that we've taken advantage of the little bit of a buoyancy that we've seen of late to sort of cut our exposure to a certain extent. We have, as I was saying, that some of the higher valuation stocks we have cut our exposure to, rather than switching around the sectors. Within the sector, we have taken a bit of a haircut with regards to higher valuation names and moved on to the ones which are lower on the valuation spectrum with markets where they are. Profit booking in one spectrum at the more expensive end and moving to the lower valuation end is what we have done. Our themes or the sectors that we are bullish on haven't changed too much. Incrementally, though, over the last 3 to 6 months, we have incrementally added towards IT whenever it has presented itself an opportunity, and that's so far worked out well, and we'll see going forward.
Trideep, we leave the conversation here for now. Thank you very much for joining in. Like we've been saying, the big event today is going to be the U.S. Federal Reserve's 2-day policy meeting. It's begun, and the outcome will be known at 11:30 p.m. Tonight. The unanimous expectation